Okay, the future of IRS regulations. So, the timeline here, I mentioned this in the earlier parts. The Government Accountability Office really kicked off the ball back in 2013. They published a report to the Finance Committee at the U.S. Senate. It was called Virtual Economies and Currencies. Additional IRS guidance could reduce tax compliance risks. And then the Taxpayer Advocate Service addressed the same issue, saying, hey, if IRS would would kind of help us out on virtual currency tax issues, we'd probably be able to get better compliance. Then, of course, they did publish their 6 pages of guidance in 2016, the American Institute of CPAs requested clarification on the like-kind exchange issue. No response was received. And then we had the Treasurer Inspector General for Tax Administration, TIGTA, released a report in 2016 to Congress saying, hey, the IRS is still not doing a very good job around virtual currency and certainly not working very hard to find unreported virtual currency gains. So the IRS started to get a little more interested in this. So in November of 2016, the IRS was granted the right to issue a John Doe summons to Coinbase. Now, a John Doe summons is a specific right given to the IRS in regard to an investigation of a specific unidentified person or persons. Now, this is different from a normal summons where the person is named. So Coinbase received this, the largest U.S. exchange of virtual currency, received this John Doe summons, and they said, absolutely not doing it. Now, in the meantime, the entire virtual currency community is just, a buzz with what does this mean? What's going to happen? Oh my God, I'm on Coinbase. Is the IRS going to find me? It is becoming very, people were very scared. So the IRS blinked first, is how they reported it, and they limited its request to Coinbase users with at least $20,000 in any one type of transaction. And Coinbase is still arguing that the request is too broad and is nothing but a fishing expedition rather than a serious investigation, and that's where it now stands. That's kind of where it's been left. So the IRS knows they have a problem. As we all know, the IRS doesn't have a ton of resources to solve problems, but there's more going on. Okay. Meantime, we have 2 representatives who introduced something called the Cryptocurrency Tax Fairness Act. Well, I'm just going to pick a nit here. The IRS uses the term virtual currency, not cryptocurrency, but okay. So this is a very silly thing, my opinion, saying that taxpayers who have gains of less than $600 shouldn't have to pay tax on those gains. Well, first off, you'd still have to prove that you didn't have more than $600 of gains, so let's say that. Second, the tax on $600 of gains is pretty insignificant, so I'm not sure why we're wasting time on this rather than dealing with much more significant issues. Okay, so I mentioned just now that the Government Accountability Office published that report called Virtual Economics and Currencies, and one of the things that they talked about in the report, which is actually very entertaining reading, they spent quite a bit of energy talking about online gaming. So there are vocational gamers that are very much on the IRS radar, folks who are earning, US dollars playing games. These are vocational gamers. They enter tournaments or they're playing for game companies and they're making a lot of money. Well, then we have vocational gamers who are not on the IRS radar. There are people who are very quietly sitting at home in their basement or something, quietly creating and selling high-level characters for dollars. So, this was brought up as the taxation of MMORPGs, massively multiplayer online role-playing games. Okay, this is what these games are called, MMORPGs. This was a main concern of the 2013 report. So what are the tax issues that are involved with that? So to understand this, we need to understand that there are 3 different kinds of economies in online gaming. There are closed flow systems, okay? A closed flow system is one in which there is no economic link between the gaming world and the real world, okay? So that we can only use virtual currency, the currency that's in that game, and it's usually gold bars or something like that, can only purchase virtual goods or services. There's no link to the quote unquote real world. And there's no taxable issues here at this point. Now there's a thing called an open flow system. So in the open flow system, the economic channels are wide open so that real assets like dollars can purchase virtual assets, and virtual assets can be sold for real assets like dollars. So in other words, there's this completely open channel between the gaming world and the quote unquote real world. Okay, so in this case, we actually can have property that's being purchased and sold. And this is potentially taxable transactions. Okay, and then we have what's called a hybrid system, where it may be flowing in one direction, but not in another direction. So virtual currency may be used to purchase virtual goods and services, and may be used to purchase real goods and services, and virtual currency may be purchased with fiat currency, meaning dollars. So the hybrid systems, just depends on what's happening in that specific game. Okay, so the most popular MMORPG on the planet is called World of Warcraft. And if you don't play World of Warcraft, I can almost guarantee that you know somebody who does play World of Warcraft. Its popularity, it tried to be a closed flow system. And even its terms of use that everyone has to click, yes, I agree to the terms of use, says that it's a closed flow system. But it's so popular that a secondary market was created completely outside of the control of the game. Okay, so for example, in 2007, a World of Warcraft player sold his account, his persona, and weapons for $9,500. So clearly in the eyes of the IRS, he's got a taxable event here. He just earned $9,500. Now he may be able to prove that he has some basis in that, and it would be great fun to be his tax preparer and try to figure that out. But that's an example of it tried to be a closed flow system, a secondary market gets created, resulting in a taxable transaction. Okay, Second Life is an example of an open flow system. So this is another hugely popular, massively multiplayer online role-playing game that very deliberately set out to create an open flow system. They created what they call Linden dollars. Okay, and there's a Lindex exchange that allows people to buy Linden dollars with US dollars, or vice versa. If you accumulate enough Linden dollars, you can then buy US dollars with those Linden dollars. So in the game itself, you can spend dollars to create virtual assets. Players build buildings, create businesses, go into business, make money, and then sell these virtual assets for virtual currency, which then can actually be converted to US dollars. Clearly, there is a taxable event happening here, right? Okay. Very interesting, right? Okay, Diablo 3 had a hybrid economy in which there was an in-game auction that players could utilize to sell their virtual assets for dollars. So if you had won some kind of magical, wonderful, sword or something, you could sell it. Here, I'm going to sell you my sword for $100. Now, clearly that is a taxable transaction. And of course, the game company took a fee for each transaction. Now, they ended up shutting it down. They shut it down because they felt that the ability to purchase these special assets rather than having to earn them inside the game, kind of reduced the whole point of the game. But other games have adopted the auction idea. So this is something that's still ongoing. Are these hybrid systems? So certainly we're in a situation where where the IRS where the IRS could be next looking at online games for taxable transactions. That might be next in our virtual currency questionnaire. I don't know. So the question then becomes, what's next? What's going to be next with IRS guidance? Is the IRS going to unravel the blockchain? Are we going to have amazing court cases? The IRS does have very limited resources, but the latest in the IRS's effort to uncover tax wrongdoing, they have hired a company called Chainalysis. I went to Chainalysis's website for laughs, and what they state on their website is that they are the leading provider of anti-money laundering software for Bitcoin. And then the website says Start from anywhere. Have a specific customer you are interested in, or a ransom note with a Bitcoin address. Have some plain text that you don't know if it contains Bitcoin references. Paste it into the tool and it will automatically find connected Bitcoin wallets. So what they are planning to do for the IRS, evidently, is to locate virtual currency owners from information on the blockchain itself. So virtual currency users are actually very worried that they're going to be found, that they're not one of the 800 people that reported virtual currency sales in their tax return. And I will say, if there was ever a very good time to be a tax preparer who works with virtual currency clients, this is definitely it.